Howdy, folks. It's Jeff Camarda, Thursday, April 23rd. And again, not a whole lot to report. The market continues to be soft. It's up. They say it's up. It's up a hair's breadth, maybe a fraction of 1%. So it really is, it's kind of going nowhere. There's been some disappointing news on the Gilead antiviral treatment. We'll see how legitimate the news is and what the results of the study are. But in any event, there really is a great debate that's occurring across the professional investment community, and that is, that, as we've discussed before, these horrible economic data, just horrible precedent-setting, record bad stuff is not being reflected in stock market pricing. And the whole question is, gee whiz, are we going to go lower? Will it be another bump this summer and then go way lower when the second quarter data becomes apparent, or is this pretty much it? And it's difficult to say. I think we're going lower, but nobody knows for sure. And one of the things that the board is considering, as I mentioned yesterday, we identified specific asset classes, kind of a rotation into the businesses and sectors that we expect to do relatively better in the new COVID world. Do we wait and go all in when we sense that we're close to a bottom, or do we kind of stage it based on technical indicators? And there are a couple folks on the board, technicians, that think we're going to stage in and participate in favorable trends, and others are more stalwart fundamentalists. So in any event, I look forward to that discussion and our joint decisions over the next couple of days. But we are prepared to do both as we see fit. I still think that the horrible economic news that's coming out, and we haven't seen the worst of it yet, is really going to pull things much lower. But there are opportunities to profit along the way, and as has been famously said by many over the years, there's always a bull market somewhere, even in the darkest of times. So more on that hopefully tomorrow or Friday. The other thing I wanted to mention, kind of as a financial education moment, is the dramatic impact of taxes on people's wealth trajectories. I call tax the master wealth skill. Tax doesn't really get enough respect, I think, in the financial planning world, but it's probably the most important thing. If you have any resource to make any money at all, the amount that can be lost to taxation is just incredible. And I liken it to a fish swimming in the ocean or the water. The fish is oblivious to the medium in which it lives, right? The water it's just there. They don't really take much notice of it. And people are kind of the same way about taxes. They're oblivious to the impact. They just pay it, and then it's kind of, I don't think much about it. But those that do, that really study it and find ways to reduce the amount of taxation, estate taxes, excise taxes, income taxes, gift taxes, the whole schmear, sales taxes, which are property taxes, and all of these things are amenable to tax reduction techniques. Those that find ways to harness this and convert, what would be lost, huge swathes of your wealth lost to tax, and convert that into cash flow for investment or other family uses, the amount of leverage is amazing. So don't discount the value of taxes. And don't discount the fact that there will be a day of reckoning for taxes for 2019, although we do have a few months leeway here with the extended extension, if you will. You're still going to have to pay the taxes. And for 2019, for most folks, that's a pretty big number. You're not going to be able to take advantage of the reduced income and average it back to 2019. You're going to have to pay the whole thing. So don't put your head in the sand. You've got additional time to plan for ways to reduce your 2019 tax bill. Take advantage of this additional time to minimize that. You're going to need the money, here in 2020. Okay, that's enough for now. Thank you so much for listening to me blabber on. Until tomorrow, this is Dr. Jeff Camarda. Be well.